Yeah, VICI Properties is the world's largest experiential REIT. We principally own gaming assets. Most notably, we own almost half of the Las Vegas Strip, where we have 10 assets. We also own market-leading regional gaming assets. And in the last couple of years, begun to diversify into experiential categories outside of gaming, most notably pilgrimage golf with Cabot, wellness with Canyon Ranch, indoor water park resorts with Great Wolf, bowling with Bolero, and most recently, a company out of Kansas City called Home Field, which is our entry into the youth sports business. We became a REIT. We emerged in 2017. We were the result of a bankruptcy situation for Caesars, part of an LBO that Apollo and TVG conducted in 2007. Part of the resolution of the bankruptcy was the creditors and the debtors agreeing that the credit would get satisfied through the creation of a REIT and the conveyance of the real estate to the creditors. I came in as the founding CEO, recognized that this was a great category of real estate, really ripe for what we would call institutionalization. Telling institutional capital about a category they didn't know much about, but would benefit from knowing about because it's got such great investment characteristics. I'd say number one is what has been a trend now for probably 20 years, and that is the increasing consumer preference for experiences versus things. And we have a strong conviction that this secular tailwind behind experiences is going to continue for a few decades to come, well, many decades to come. And whether it's gaming operators or experiential operators in other categories, they have an opportunity to be in the business of creating and delivering experiences to consumers and bring them back over and over and over again. And the real estate implications of this are that these are experiences that cannot take place within your home. Amazon can't put them in a box, can't put them through a wire or a wavelength, send them to your house and disintermediate or displace the real estate. These are by definition out-of-home experiences, and we love partnering with operators who can deliver these experiences for decades to come. Well, certainly the last couple of years with the highest velocity of rate increases and money tightening that we've seen in 40 years has been a bit of a trial for REITs generally, all REITs really. And what we're simply hoping for is that sooner or later we're going to get clarity, we're going to get visibility, we're going to get some conviction as to where we are going to be for the next few years in terms of what interest rates are, and thus what the capital costs are for REITs, for VICI specifically and REITs generally. And I do think we'll get that clarity at some point here, but it is going to take a while and it may take longer than people originally anticipated. I would say that it is our bringing Class A real estate of a scale, a quality, an economic magnitude, and a mission criticality that truly is Class A, but bringing that Class A real estate to the net lease model. The net lease model has a lot of really strong characteristics to it, especially having to do with the transparency and integrity of net lease economics. You really truly know what free cash flow you're getting. And in this case, we're bringing that transparency and integrity, again, to Class A real estate, like the Venetian, like Caesars Palace, like MGM Grand, like MGM National Harbor, and giving investors a chance to own these Class A real estates, enjoy a very strong dividend right now, about 5.5%, and see capital appreciation, as they have so far. For over the prior 5 years ending December 2023, we were the 9th highest performing total returning REIT in America, joined by mainly industrial REITs and data center REITs. Experiential real estate has been a good provider of total return over the last few years, and we think it can be again for years to come.